on time.
Priya, are you able to hear us?
Yeah. Yes, I'm able to hear you.
Yeah, ma'am. I'm just checking with Priya, one of our colleagues.
Yeah.
She's actually facing some bandwidth issues. So maybe her video will. She might not be able to
Okay.
make it on. Okay. She's there, but
She's there?
yeah, she's there. Priya, are you able to hear us? You are in mute if you are speaking.
সবাইকে আসতে গুগল মিট করো জিএসটি অ্যাওয়ারনেস আছে গুগল মিট করো খোলো হ্যাঁ হ্যাঁ ভালো আছে তো এক্ষুনি 12:30 ঠিক আছে রাজেশরা সবাই রাজেশা আছে
Ma'am, you need to admit Priya. She is being pushed out again from the meeting.
Ask him to join.
Ask her to join again.
She joined, but once she is joining, she is being thrown out from this meeting.
No, it is because actually the network issue, I think so. I call her to join again.
BBJ Construction is the link.
तुम एक बार ज्वाइन करो एडमिट करें 2 मिनट के अंदर कैसे सब लोग है तो हाँ देखा था तो और एक बार ट्राई करो एडमिट करेंगे हम तुम्हारा नेट का इशू हो रहा है भैया ऑन नहीं होगा तो तुम पीपीटी कैसे बोलेगा
यहाँ पे आ ही नहीं रहा
तुम तो आ ही नहीं रहे हो तो कैसे एडमिट करेगा तुमको
हाँ অবশ্যই রিপোর্ট হবে
पहले तो आ रहे थे
ফেসবুক লাইভটা ঠিক আছে ইউটিউব চালু করেছি
এই দেখ তো আবার বলছে
কোথায় এসেছে আসলে তো এখানে অ্যাডমিট আসবে এই তো
ওই তো
জয়েন্ড অলরেडी
हाँ she has joined now
अरे একবার জয়েন করেছে মানে আর অ্যাডমিট
हाँ अब तो ज्वाइन कर लिया तुम दिख रहा है तुमको स्क्रीन हटा क्यों देगा
এই তো
तुम है तुम बात करो म्यूट अनम्यूट करो बात करो कैमरा ऑन करो अनम्यूट करो no can't hear you
अरे
still unmuted नीचे में बटन देखो हाँ अभी ठीक है अभी बात करो no we can't hear you I don't know why speaker तुम हेडफोन यूज कर रहे हैं Can Rakesh continue with the PPT? Rakesh?
Yeah, but she was supposed to say on
I know, but everyone is there. See, so many people has joined. No one is having any issues.
16
कुछ network का problem है.
Okay, let us start.
Can you do that? राकेश दूसरा नेटवर्क से प्रिया को बोलो.
Yeah, she's trying to log in. Maybe you can add later on once she joins. We can start.
But as soon as we start, we cannot stop, isn't it?
Yeah, sure. So maybe I will continue with the slides as soon as she joins. She can carry on.
So let's start then, Rakesh.
So we can start then.
Yeah, yes.
Good afternoon, everyone. Today, in line with the concept of Atmanirbhar Bharat, today we have held a morning program on stakeholders meet. Now, in line to that, we are having one more webinar on GST compliances. I thank the team of KPMG that they have kindly consented to this presentation on GST compliances and give us some ideas and views on the compliances which have to be carried out. I welcome you all, and now I will, with the kind permission of CMD sir and DF sir, I request their kind permission to start the webinar.
Yeah, thank you, sir.
Now I am handing over the dice to Mrs. Chandima Banerjee, Deputy Manager FNA BBJ, to take over the charge and start the program.
Thank you, Tommy. So today's webinar is for GST compliances by BBJ and awareness. As you know, GST has been launched in 1st July 2017, and it is the most ambitious and remarkable indirect tax reforms in India's post-independence history. Its objective is to levy a single national uniform tax across India on all goods and also services. So GST has replaced a number of state taxes, central taxes, made an integrated market and brought more producers into the tax net. By improving this, the efficiency has improved, the growth has increased substantially, as well as government finances has been improved a lot. Implementing a new tax encompassing both goods and service has, by the center and the state, in a large and complex federal system, is really an unprecedented approach in the modern global history, and India has really implemented and achieved this goal in these 3 years. GST is one indirect tax for the whole nation, which will make India one unified common market. The GST intends to subsume most indirect taxes which were under a single taxation regime. For example, previously we used to have many taxes like VAT, excise duty, service tax, which has now been subsumed and made into a single tax system for both supply of goods and services, right from the manufacturer to the consumer. And the most interesting part of this is the credits of input taxes which are being paid at each stages will be available at the subsequent stages of value addition, which makes GST essentially a tax only on valuation stages. That means the final consumer will thus bear only the GST charged by the last dealer in the supply chain with set of benefits at all the previous stages. This is expected to help broaden the tax base, increase the tax compliances, and reduce economic distortions caused by the interstate variations. Now, a question may come to everyone's mind: why GST has been proposed? So, previously imposed uh, pre-GST regime, the Constitution has empowered the central government to levy excise duty on manufacturing of goods and service tax on supply of services. So this empowerment given to the different stages of the government, and also CST was levied on interstate sales of goods, VAT was collected on sale of goods in the state level and collected and retained by the exporting state. Further, many states levy entry tax on the entry of goods to that local areas. This multiplicity of taxes at state and central levels has resulted in a complex indirect tax structure in the country that is hidden and a hidden cost for trade and industry. In order to simplify these and eradicate the cascading effects, GST was introduced by the government, and government of India attempted various tax policy reforms for a long time, which included VAT. But now the idea is that this has led to an idea of an one nation, one tax, and the introduction of GST in Indian financial system has made the national goods and service tax system very simplified. For example, BBJ was previously also registered in 13 states for VAT. And in all these 13 states, there were different tax rates, different rules, different way of filing returns, which was so very complicated for a person in head office to control all these things from here. We had to depend upon the consultants, we had to depend upon and the assessments were very irregular and very long term. Now, in GST, an online monthly returns has been implemented, which the returns are very regular, and we can get our results. We can view our input tax credits in every month from the 2B in the portals, and which has made our tax calculations and our filing of returns very simplified and in a good manner. Presently, the service sectors in India constitutes a tax base with a vast potential which has not been exploited before. In this context, the GST is justified as if to subsume all the services for the purpose of taxation. Since major central state indirect tax have got subsumed under GST, the multiplicity of tax, which I previously said also, has substantially reduced, and the government is now able to see the uniformity in the tax rate, and compliances have become very easy. Nowadays, the tax authority can view what people are giving taxes and what are the threshold limits. They can judge from that. Introductions of GST TDS, introductions of threshold limits have made this easier for a government to assess the bulk of taxpayers in the market. So it has given an opportunity for a government for a good revenue earning from this, and the finance has also increased much. So in a nutshell, what I'm supposed to say is GST is a comprehensive indirect tax levy on manufacture, sale, consumption of goods, as well as services at the national level. GST is an indirect tax for the whole of India to make it an unified common market. GST is designed to give India a world-class tax system and collection. It would end without any distortion of differential treatment of manufacturing sector and service sector as well. GST will facilitate. The most important thing is a seamless credit across the entire supply chain and across all states under a common tax base. What are the advantages and disadvantages? Before we had VAT, okay? The disadvantages of VAT was there was a cascading effects of taxes. It was not possible to claim the input tax credit on service under VAT. Even the CST credit was also not adjusted. Different VAT rates were there in different states. Different VAT laws were implemented in different states, which was very difficult for a tax consultant or a tax accountant to understand and be expertise in that. Moreover, the refunds of our assessment was also very long lasting, long taking. The threshold limits were also lesser. So people used to avoid taxes. And now what advantages GST has brought is this cascading effect has been removed. A simple online procedure has been made where monthly returns are generated. Lesser compliances there, refunds are very fast. For our examples, we have got refunds within 60 days after date of applications. Anti-profiteering clauses have been included, which has helped BBJ in all the pre-GST contracts. The rates were inclusive of taxes, and we have claimed extra claim to our clients in this respect. GST TDS is also a very welcoming thing for which government authorities can assess the turnover of the suppliers from that records. So more tax revenues have also made a wider base for both central and states. That is all. And BBJ has complied the GST very regularly and with the cooperation of management and all the employees. Now I am introducing Mr. Rakesh Chatbar, Senior Manager BSR, a member firm of KPMG, and Ms. Priya Bijlani, Assistant Manager from BSR, to address the next session regarding this. And Tushar Bhatia is also there from KPMG. So Rakesh, you may continue with the session.
Yeah, am I audible?
Yes, absolutely.
Yeah. So thank you, Ms. Banerjee. First of all, let me take this opportunity and thank the entire team of BBJ, especially CMD Sir Sri Sundar Banerjee, Director Finance Sri Mukesh Kumar, and last but not least, Deputy Manager Finance and Accounts Srimati Chandrima Banerjee, for allowing us this opportunity. It gives us an immense pleasure to be part of this event, and at least we'll try to enlighten the audience over here on various requirements under GST, which though has been largely captured by Ms. Banerjee in the first session. We will try to cover the various requirements under GST and create awareness of the same, and also highlight how BBJ has been carrying out such compliance requirements and how they are ensuring the same. During the session, feel free to ask any questions you may have. We will try to address as much as we can, and to the best possible efforts, we will address those questions and answer the same. Before we start, let me introduce ourselves while Ms. Banerjee has introduced us. Just to reiterate, I am Rakesh Chatbar. I'm Associate Director, basically Senior Manager, part of BSR, KPMG member firm, and I'm leading the entire Kolkata practice at present. With me, I have two of my colleagues, Ms. Priya Bijlani, who is an Assistant Manager and a part of, again, BSR KPMG member firm for almost 6 years now, with Mr. Tushar Bhatia, who is basically in and out, helping out BBJ for all the compliances, and has been the key member for us and BBJ as well. And he is a senior consultant and part of KPMG member firm for almost 5 years now. To start with, we shall first provide the background on the GST regime as to what all taxes has been subsumed and what are the taxes that are levied under GST regime. Tushar, maybe just share go to the next slide. So this slide basically has been captured by Ms. Banerjee, wherein we have tried to show where all BBJ has its presence.
Actually, we have 13 registration. Now we are with 9 registration. We have registered in all these states, and these are the GSTN number, which all employees of BBJ do have now. And whenever, in this case, Rakesh, we must tell what are the foremost thing we must do when a company gets an order in a new state. First, we have to register that. Okay, we have to take a new registration in that state, and in that state you can see the first 2 digits of this GSTIN is the state code. The next numbers are the PAN of BBJ, and after that we have some numericals to identify the GSTIN. Okay, am I correct, Rakesh?
Yes, yes. Rightly pointed out by you.
Yeah. Another thing is that we may have registration in those states, but maybe a new project has been added to that state. In that case, we have to make an additional place of business to that state. That, for example, we have done it in Chhattisgarh because we have bagged an order in for Hasdeo River. And we have already added this. Another thing is, after the closing of this site also, we must amend the registration and remove this. Isn't it, Rakesh?
Yes, yes.
Now you can continue.
So basically, just to reiterate what you highlighted, ma'am, rightly pointed out by you. As a BBJ, we should be mindful of any project sites getting open. So if there is any new project sites being happening in any of the particular state where we don't have the presence, we should highlight the same immediately and take the registration over there. And as soon as, say, the project site work is over and there is no requirement of BBJ to have its presence over there, the said registration may be cancelled later on if there is no future prospects or any projects to be carried out in near future in the said state. Okay. Going to the next slide. So while Ms. Banerjee has in detail discussed on what all taxes were there in the pre-GST regime and the structure of the GST, this slide basically highlights the same, wherein we have tried to capture that in pre-GST regime there were a number of levies under central levies. There had been excise on the manufacture of the goods, additional duties of excise, CVD, SAD was there on the import of goods. CST again was there as a part of interstate sales with subject to C form, and also service tax which was there on the services. On state levies, again, there was entry tax, octroi, VAT on intrastate sales, and also there was in some state luxury tax or entertainment tax. All these taxes had a requirement of carrying out the compliances in the respective central and the state excise act, and there were a number of compliances to be carried out, having also cascading effect of the taxes, like we could not adjust the excise duty with VAT or VAT with excise duty, etc. So there were cascading effect leading to increase in the prices, and with GST coming in, all these taxes have been subsumed, and only one tax is right now there, which is goods and services tax. This is again bifurcated into central GST, state GST, respective state GST, integrated GST, and GST compensation cess. Talking about states.
Next slide.
central GST and the state GST. This is basically levied on all the intra-state supplies which are happening. So in this example, if you will see, say suppose BBJ West Bengal is procuring any goods from a particular vendor within West Bengal itself, then that vendor would be charging CGST and West Bengal GST on BBJ, which will be availed as a credit. And say furthermore, if BBJ West Bengal is doing a stock transfer to BBJ Karnataka side, it would be levying IGST, which is an integrated GST and leviable on all the interstate supplies which are happening. And this CGST and SGST can be adjusted against this IGST, and accordingly the cascading effect which was earlier there is no more, and allowing the reduction in the prices and also helping out in negotiating the contract values, etc., which has been the practice followed by BBJ. With this, so this is basically the structure of GST. GST compensation cess is also being levied on certain goods, which is basically to compensate the states for the next 5 years, and maybe it may further be extended for more 5 years to compensate the losses which the state had to bear with GST coming in. And accordingly, this GST compensation cess is being levied on certain specified goods. Some of the examples being coal procured value 400 per ton is the cess which is levied, and this all goes as a compensation to the states. With regard to rate structure, we have the lowest rate right now as 5%. Obviously, there is also a rate of 3% and 0.5% for jewelry sector. We have not discussed that, but the basic lowest rate is 5%, and it goes on as a highest rate of 28% for certain goods, which are seen, or basically the electronic goods or the motor vehicles, etc. There are standard rates as well, which is 12% and 18%, and largely all the goods or services, including those in which BBJ is dealing in the services wherein we have been providing the works contract services for specified structure of roads and bridges construction. 12% is the rate which is applicable on BBJ, and also there are certain movement of the goods happening at the site from one location to another location of BBJ, largely of the steel, that is subjected to 18%. So these are the two major rates which are applicable for BBJ, which we have tried to highlight in this slide, which is there. Yeah. Next slide. So with regard to going ahead with the various aspects in GST, what we will try to capture is largely some of the compliances which are needed on all these buckets, running from invoicing requirement, availing the input tax credit. There has been change in the input tax credit availment, and it has been a very stringent law which has been brought in now from 1st January 2022, which we'll be discussing later on as a next slide. And the same should be complied duly. While we have been complying with, we have to be now mindful that we don't take credit even of a single rupee, which is beyond what is appearing in the GSTR 2B. Apart from that, we have already discussed on the rate of tax. We'll be discussing on the waiver requirements, registration and compliances we have captured in the previous slides. We'll be also discussing on some requirements under the job work and the compliances thereof, and the compliances for the reverse charge. So with this, maybe if Priya is there in the call and she is able to take it forward, maybe I'll request her.
Yeah, please.
Maybe I can tell Priya, my colleague. Priya, are you there? Are you able to hear?
Yeah, are you able to hear?
Since there's some issue, maybe I will take it forward.
Yeah.
Yeah. So going to the next slide, what we have tried to capture is various terminologies which are there under GST.
Actually,
So,
Rakesh, I must interrupt a bit. We are actually giving this awareness program not to make them GST experts, but they require these information for the day-to-day activities in BBJ, for the construction activities going on. So just highlight on those areas, okay, where BBJ's involvement is required. You know, that
sure,
will be
sure.
better. It won't be
Sure.
more theoretical, it will be a bit interesting.
Right. So we have tried to capture the later part.
Yes.
This is just highlighting some of the aspects of what all the GST law is all about, and briefly touching on this so that we can create a background and then specifically focus on the requirements which are there for BBJ. Yeah. So in this slide, basically, if you will see, we there is a discussion on supply. Unlike under previous regime, the taxes which was levied, like excise was levied on clearances of manufactured goods. VAT was applicable on sale, and with that GST, the levy of GST is not on basically the terminology used is supply. So whenever there is a supply happening, that is subjected to GST. And again, if there is a supply or movement of the goods happening from one side of
Yeah.
BBJ to another side of BBJ, that also
So
is
comes
subjected
under
to GST.
GST, yes.
Yeah.
So actually, this everyone should understand from project that whenever you send some material from HPY or the other sites to the other sites in a different state, so this becomes a related person, isn't it, Rakesh? So
Yes.
a related person has also to give a GST invoice. So in this case, stock transfer is also taxable. So in that way, the challan should be forwarded to the head office to make GST invoices. And I'm suppose BBJ is complying that for a long time.
Right.
Okay, now
So-
we can continue.
Right. So basically, under GST, just to reiterate, it is state-wise registration. If a company has, each registration is looked as a separate entity,
Yes.
and any movement of the goods happening from one registration to another registration is also subjected to GST. Like in earlier regime, when we were transferring the goods from one location to another as a stock transfer, we were carrying out Form F. There was a concept of Form F.
Yes.
That is no more. And then when we were doing it in earlier regime, it was without any taxes, subjected to furnishing of Form F. That has now been replaced, and we should be mindful that from any state, the goods are moving from to another state or any other project sites which are in other state, that would be subjected to GST. Yes, within the state, if there is any movement, there is no requirement to charge GST because it is within the same registration, the movement is happening. As long as the recipient and the supplier unit GSTN is getting changed, immediately that is subjected to GST, and that should be highlighted specifically to the GST team there in BBJ as well as to us, so that necessary compliances of charging GST and making that payment is duty compliant, which largely has been complied with. Just that we have highlighted this again so that we are aware of the fact. With regards to time of supply, so again, time of supply is nothing but it says when the GST should be payable on a particular transaction. With regard to goods, it is to be paid as soon as the movement of the goods happen. So the GST has to be paid for that month when the invoice is raised and the movement of the goods is happening. And invoice has to be raised at the time of the movement or before. It cannot be post the movement of the goods. So this should be we should be mindful of, and accordingly the GST needs to be charged. This is the time of supply in relation to the goods. With regard to services, as soon as the completion of services is acknowledged, we have 30 days timeline wherein we have to invoice from the completion date. Within 30 days, we have 2 days of invoice on our customer and charge GST. So this anyways is being taken care. This is being highlighted during this session. Any questions on this, we can take it up. With regard to place of supply, so while one is when to pay taxes, the third bucket is basically where to pay taxes. Considering GST being a consumption-based tax, place of supply plays a very important role, and wherever the services or the goods are getting consumed, that is generally the place of supply. In relation to immobile property related services being provided, the law specifically states that the immobile property where it is situated, the place of supply would be that place. So accordingly, irrespective of whom we are billing to, if the immobile property is situated in say particular state, say in Odisha, the place of supply will be Odisha, even though we are billing it to West Bengal party, and the taxes has to be paid to the Odisha government.
Exactly. So these two things we have to keep in mind. That is the place of supply and the point of taxation.
Right. Right.
Yes.
These are the two main pillars of GST.
Pillars, yes.
And then we should be ensuring that we are duly complying with that. With regard to coming up to the next bucket is the valuation. While obviously when we are dealing with any particular third party customer, whatever is the contract value is accepted as the transaction value. So again, like in excise regime there was a transaction value concept. The same thing is also there in the GST regime, and we have to pay GST on the transaction value, which is nothing but the value agreed with your customer. And also there are certain expenses which if the company has to bear to carry out that contract, and that is being charged separately to the customer, that also forms part of the value. I would like to just highlight over here that this valuation will be very much important with respect to any movement of the goods happening from one GSTN to another GSTN of BBJ.
That is stock transfer.
Right, that is for stock transfer, because there is a specific valuation rule which has been prescribed for such stock transfer. And if the recipient unit, which say in for a particular example from BBJ West Bengal, there is a stock transfer happening to BBJ Karnataka for any project site, the valuation may be adopted as any value which BBJ decides to. Maybe it might be cost or below cost or cost plus markup. If the recipient unit is able to take the full credit of the GST, the value which is being charged on the face of the invoice would be accepted as the transaction value or the open market value. So generally, it has to be at open market value, but there is a liberty to charge any other value apart from the normal market price in case of stock transfer if the recipient is able to take the full input tax credit.
So this is a problem often we face during a stock transfer. The project people always keep on asking what value we should take. So first of all, it should be the taxable value of the invoice available. Otherwise, it would be the open market value.
Right.
So it should be highlighted. Everyone has any question about it, you can ask. Okay,
Yeah.
we can move on to the next
Yeah.
point.
Next bucket is basically the input tax credit. So time and again, there has been many changes with respect to input tax credit, and with regard to various fake registrations being taken, fake invoices, news being coming up. This has been the main focus area for GST department, and with shortages in revenues for certain months. Obviously, it has now been stable, and 1 lakh crores per month has been the revenue. More than 1 lakh crore has been the revenue. But still, the focus of the government is to curb the fake invoices, and to catch hold of those vendors who are not complying with the GST. And due to this, the recipient who is dealing with such vendors has to be double sure that if they are dealing with that vendor, they are complying with the GST duty, filing the return, so that that invoices gets reflected in our name, in BBJ's name, and then we are able to take the credit. We will discuss more in detail of input tax credit in a subsequent slide, maybe. I'm not highlighting or focusing on this right now.
And the notification, the new notification which has been effective from
Right.
1st January, you can highlight that.
Yeah,
also.
so that we have highlighted separately in the subsequent slide. So maybe I will discuss this input tax credit in more detail in the subsequent slide. Apart from this, and maybe we'll take up the input tax credit questions at later on stage once we discuss that. Apart from that, there is a requirement of reverse charge. So when the GST was brought in, reverse charge was required to be paid on all the unregistered purchases at that moment, which was at around October 2017. That provision was kept on abeyance, and no more the taxes is to be paid on any of your unregistered purchases. But yes, for the limited period of time from July 17 to October 17, whatever procurements we had of unregistered purchases, we had to pay taxes, which was duly paid. Apart from that, there are certain notified supply of services largely, and certain supply of goods. Obviously, it is not applicable for BBJ, but for certain supply of services like GTA, rent-a-cab, manpower supply services, director sitting fees, advocate fees, basically the legal lawyer firm fees, sponsorship services, if we are making any payment on for sponsorship. All these are subjected to reverse charge, and BBJ, if are procuring such services, are required to pay taxes under reverse charge, which largely is being taken care during the monthly compliances being carried out, and whatever expenses are being booked on this heads, the GST are being paid. And in any case, if there is any changes in the law, we are highlighting that, and we are really complying with this. Maybe any point on this, ma'am, if you want to highlight.
Yeah, one thing you might say that when we receive this reverse charge bill after a long period, the invoice date is suppose of December, and we receive it in March. So
Right.
what consequences we will face? Do we have to pay interest or not on that? You can
Right.
highlight this.
Right. So rightly pointed out by you, like we discussed in the earlier slide, there is a time of supply.
Yes.
Okay. That is when you are liable to make the payment of tax on a particular supply. With regard to reverse charge, the time of supply states that you have to make the payment within 60 days from the date of the invoice. That is, say if a GTA is raising an invoice in say January month, and that is being booked, then earliest of the 2 days, which is the date of payment, or on expiry of your 60th day from the date of invoice, would be considered as the time of supply, and you would be required to pay taxes for that particular month. So say example, in January month, if I got an invoice, I made the payment say in April month of that invoice, and 60th day is say expiring on say March 1st week, then the liability has to be paid by March. We have to ensure that these invoices are provided before March and is accounted for in the books, so that necessary payment can be done in the March itself. Otherwise, this would be considered as a delay in payment of taxes, and interest of 18% would be subjected to on this payment if it is getting paid say after month of March.
In this regard, I want to say that people have to also keep in mind that these RCM taxpayers also file their returns, and it appears in 2B, isn't it?
Right.
And government can see whether the invoices have been booked and we are not paying RCM on the same.
Right.
So we
This
have
will
to be
only
very
be for
cautious.
registered vendors.
Registered vendors, yes.
But there might be certain cases wherein unregistered vendors might be there. So those invoices also we need to ensure that we are accounting. We are doing the accounting of those invoices on real-time basis, and that invoices are not being booked, say after 60th day, just to avoid any interest or penalty provisions on that. Yeah. Going ahead with the next slide. So what we have tried to highlight over here is the various documentations which are required for various types of supplies, oblique various transactions. So first is tax invoice. This is to be raised for all the supplies which are happening by BBJ. Maybe it would be happening from one location to another location. That again, if it is subjected to GST, wherever we have to charge GST, that has to be on the face of the tax invoice. There has to be a tax invoice which has to be issued. Say if suppose BBJ is receiving any advance, at that moment obviously tax invoice is not to be raised, but there is the concept of receipt voucher, wherein on receipt of such advances we have to pay taxes if it is for supply of services, and we have to issue a receipt voucher. This has to be adequately reported in the returns as advances, and subsequently if there is any invoices being raised against those advances, we'll be adjusting the taxes already paid, and the same would be adjusted against the tax invoice.
So for unregistered, do we have to make receipt voucher, Rakesh?
Any advances which you receive,
Yeah.
ma'am, irrespective of whether it is unregistered party or registered party, we have to have a receipt voucher in place for such advances. With regard to delivery challan, this is basically used wherein the transaction is not subjected to GST. Say for an example, where the movement of the goods is happening to job worker to carry out certain specified job work assigned to him. In this regard, BBJ may be issuing a delivery challan to that job worker and send that goods through e-waybill and along with this delivery challan.
Rakesh, for layman, we must tell them what is the definition of job worker first, so that they will understand.
Right. So job work transaction basically is, if in a layman term I say that it is like where I as a principal or having a title of that goods in that particular goods which I am dealing in, and I want say an outsider to do certain processing or say carrying out certain manufacturing activity on behalf of me on that particular goods where the title of goods remains with me, then I have to move that goods from my premises to that premises of job worker, and the processing which gets carried out by him, that would be considered as a job work transaction.
Yeah.
And those inputs which I send out to that job worker, the GST law requires that I have to get back that goods from job worker after the necessary processing done by him within 1 year with regard to inputs. And if I'm sending any capital goods, that has to be again brought back to my premises within 3 years. So we'll discuss separately on this in the next subsequent slide, wherein we have highlighted the job work transactions and the requirement and the compliances thereof. This is what is broadly we wanted to highlight over here. And for such transaction, delivery challan has to be issued. Apart from that, there is a concept of debit note, credit note. Say for example, if there is a contract value which was defined, and due to certain additional efforts, there has been some increase in the prices, and this is leading to say escalation of your contract value, and you are required to charge additionally. Say, for an example, if the contract value has been completed, you have raised all your invoices, and there is some say escalation, and the valuation is being, or the contract value is increased. That escalation or incremental consideration which I charge towards the original supply which was already done, that has to be done through debit note. So this is basically where the consideration is increased at a later on stage for the supply which had already been carried out. For that, we have to issue a debit note by giving the reference to the original supply. With regard to credit note, it is nothing but the other way around. If there is any reduction in your consideration, that reduction has to be carried out through credit note.
And you must mention over here that credit notes can be raised up to which time?
Right. So unlike debit note, there is no time limit. But for credit note, there are two requirements. You can take the benefit of the credit note only if such reduction in the prices is defined in the agreement prior to your supplies happening. So the agreement should quantify what would be the reduction in the consideration at a later stage of happening of an event. Only then the benefit of GST will be passed on to us. Furthermore, this credit note can be issued for a particular financial year by the end of next financial year, September month. So basically, if for financial year 21-22, if there are any invoices which have been raised and you are required to issue a credit note, that has to be issued by September 2022 and needs to be reported in your GST returns. If it is being issued after September month, then the benefit of GST will not be provided to BBJ, and that has to be basically a commercial credit note without GST. So this has to be mindful. We should be mindful of.
Thank you.
With regard to bill of supply, there is a concept like tax invoice. Maybe Tushar just go back. Like tax invoice is to be issued on all your taxable supplies where the GST needs to be charged. There is a terminology used, bill of supply in GST law, which is to be used only if you are supplying the exempted goods or services, which is not the case for BBJ. But say for an example, if there is any supplier who is dealing in certain exempted goods or services and they are raising the invoice, they will, instead of issuing a tax invoice, they would be issuing a bill of supply. Yeah. Next slide, Tushar. Yeah, with regard to continuing with the tax invoicing requirement, we have specifically highlighted over here certain requirements under GST law with regard to the same. So while there was a requirement to issue a tax invoice, which could be generated from your ERP system and you hand it over to your customer, but recently there has been a new concept which has come in, which is e-invoice. This is basically again to curb all the fake invoices which has been there, and the intention of the government has been with regard to this invoice is that you cannot give the invoice to the customer unless and until it is first reported to e-invoice portal, the government e-invoice portal, and you get a specific 64 hash specific unique number from government with regard to that particular invoice. That is, in layman terms, I would first report this invoice to government. Government will acknowledge that, and they will provide me a unique series which I have to affix on my invoice, as well as a QR code has to be printed on my face of the invoice, which will contain all the details about my tax invoice, and this all will be validated by government, and then only this invoice will be considered as a valid invoice and would be handed over to the customer. So in case if there is any supplier on whom e-invoice is applicable, and if he is not providing us the e-invoice having that QR code and the specific parameters of the unique reference numbers obtained from government, that will not be considered as a valid document, and accordingly we should be mindful of. With regard to invoicing, it has been brought in a staggered manner. First of all, it was applicable for those companies whose turnover was more than 500 crores from financial 17-18 onwards, and was applicable from 1st October 2020. The later on, that threshold was reduced to 100 crores, and accordingly BBJ was part of that requirement with effect from 1st January 2021. And accordingly, any invoices which has been issued from 1st January 2021 by BBJ from any of its particular GSTI, that has been reported to invoice portal, and we have met with the requirements of that. Now that further threshold has been reduced to 50 crores, we'll discuss the implication of the same in the input tax credit portion. But yes, with this, while a tax invoice through your ERP is okay, but we also have to have a e-invoice validated by government to make it a valid document. Along with that, if there is a movement of the goods happening, that has to be done through e-waybill by mentioning those invoice details. As in there are two parts in waybill. Part A is covering the invoice details, and part B is covering the transporter details and the truck details through which the movement is happening. With regard to job work transaction, where like we discussed, we'll be issuing the delivery challan, and along with delivery challan, the movement has to be done through e-waybill. Otherwise, those movements will not be considered as a valid movement. So this is basically to highlight the invoicing requirements.
Will you please highlight what, in which cases e-waybills are not required?
So there are certain relaxations provided, like say for an example, if there is a movement within the state happening of a goods valuing less than 1 lakh, then waybill is not required. There are certain other relaxations as well for certain goods wherein the movement of the goods, the waybill requirement is not there. But specifically for BBJ, if the movement is within the state and the value of the goods is less than 1 lakh, we may not carry out the waybill requirement. But obviously, as a keeping track of all the movements, it is always advisable to go ahead with the waybill for each and every transaction and for each and every movement of the goods for better control, obviously, and then that should be the focus.
And the exemption of GST stock transfer, I should have mentioned there only. What are there for tools, jigs and fixtures and cranes?
Right.
That has to be.
So for tools, jigs, obviously it is not subjected to GST.
Yeah.
And that can be through delivery challan. And for the interstate movement, obviously waybill is required. Within the state, obviously it is not required if it is less than 1 lakh. But with regard to tax invoicing requirement, it is not required specifically because there is a specific clarification from the government with regard to tool, jigs and cranes that is not subjected to GST. And accordingly, you may move the goods basis the delivery challan and not the tax invoice.
And here you must emphasize that nothing old consumable goods or anything is doesn't fall under this exemption. So we must be careful with that, and the nomenclature in the challan should be proper so that government authorities can understand why GST invoice was not made for the specific challan.
Right. Yes, certainly. Yes.
Next.
Yeah. Moving on to the next slide. This is with regard to waybill. So, like we discussed in the earlier slide, the waybill is required for every movement. However, the same is not required for interstate movement if your goods value is less than 1 lakh rupees. And for interstate movement, if the value of the goods is not exceeding 50,000 rupees.
So we have already covered this.
Yeah.
Only the e-waybill can be cancelled within the portal within 24 hours of generation of it.
Right. So if there is any incorrect declaration or inadvertently we missed out to mention certain details or the details was not as per the document, that we should ensure that the way bill is cancelled within 24 hours. If it is not cancelled within 24 hours, you will not be allowed to cancel it, and then unnecessarily questions with regard to this has to be answered during the assessment as to why way bill has been generated for a particular transaction twice, and furthermore, if there is any way bill being issued for a particular invoice, you cannot raise another invoice, another way bill for that particular same document. So this will lead to unnecessarily creating trail of documents, which will be confusing both for the department as well as for the management of BBJ. So we should be very careful during the generation of way bill, and it captures all the details which is required. And if there is any incorrect details or the details are not matching with the document or the goods which are being moved,
and the penalties
just wanted
are
to highlight
also
that there is
high.
a penal provision. Yeah, so I was just highlighting that. So there is one penal provision, and recently the penal provision is such that it is while you have to pay taxes, but penalty of 200% of the tax involved in that particular movement of the goods has to be paid. And considering the penalty being 200%, this is something which is very, very alarming, and we should be ensuring that there is no movement of the goods without way bill. And if there is way bill generated, that should be capturing all the details which is there as per the invoice, also what is there loaded in your truck. It should match.
Yeah.
And also with regard to the validity of the way bill, there has been recently a change wherein earlier for every 100 kilometer, 1 day validity was there. But now that has been increased for first 200 kilometers, it is now 1 day. Earlier it was 100 kilometers, 1 day which was there. From 200 to 400 kilometers, it is 2 days validity. So we have to ensure that the transporters are moving the goods accordingly within that validity period. And if it is not being sent within that validity period, again there can be a consequences of penal provisions, which again can be of 200% of the tax involved in that particular movement. Just that if we see that due to certain practical scenario like breakdown of the truck or certain other mishaps which might have taken up, practically it might not be possible to send the goods within the validity period defined as per the GST law. So with this regard, there is a relaxation under GST wherein you can ask for extension, and then this should be done along with your transporters, and the extension should be asked for before the expiry, ideally. And if it is expired, it is within 8 hours that you can renew and extend the validity of that particular way bill, so that we are compliant thereof. Yeah. Next slide, Tushar. So with regard to job work transaction,
This is very important for our company because we have many job work transactions,
right.
and
So-
we cut it short and make it simpler.
Sure. So with regard to job work transaction, like we highlighted earlier, the job work transaction is such transaction wherein a particular person outside BBJ carries out certain processing or manufacturing activity on behalf of BBJ on the goods, the title of which remains with BBJ, and the movement of the goods is happening to that premises. That has to be done through delivery challan and way bill. And the law also requires that once that processing or manufacturing activity is carried out by that job worker on behalf of BBJ, that has to be returned back to BBJ's premises again within 1 year if it is input which has been sent out, and if it is a capital goods which has been sent out, then it has to be, we has to ensure that it is returned back within 3 years from the sending it out to the job worker.
This is very important.
Right.
People in the site must also look into it, and we are always dependent. We have to file a return in this regard also. That is ITC 04. When the goods are being returned back, and we often get this information from the fabricator, which is not very desirable. Project people, if they keep a record of this and authenticate this, I suppose the returns will be more authenticated.
Right, right. Just to highlight that if this is not getting returned within 1 year or 3 years, the consequences are that this will be considered as a deemed supply, and taxes on this has to be paid from the date when it was sent out to the job worker till the date you make the payment, and again interest at the rate of 18% would be applicable for that particular period of time. So we have to ensure that the goods are returned back within 1 year or 3 years, as the case may be. And say if practically it is not feasible to return back, and there are certain practical or there are certain issues in returning back, and then there is a justification which is very much possible, then we should apply for extension to commissioner, to our jurisdictional commissioner in GST, and ask for extension, which may further be extended by 1 more year for inputs and 2 years for capital goods. So this, ideally, we should ensure that we are in constant touch with job worker and ensure that we get the goods within 1 year. And if it is not happening, we should, before the expiry of 1 year, apply for the extension. Obviously, it should not be practiced, but there have been certain cases, one being example of, I guess, it was for Manipur, right, ma'am?
No, Mizoram.
Mizoram, yeah. So for Mizoram, there was obviously a practically difficult to bring back that goods due to COVID and other.
There were substantial reasons which we highlighted and got letters from.
We managed to get the extension, but obviously 1 year is enough in the sense of for any processing. So we should be ensuring that it is returned back to us within 1 year. But yes, there is a provision to ask for extension, and we have been trying to manage it for Mizoram case. Yeah. Next slide, Tushar. Now this is very, very important. What we'll be discussing for the next 2 slides is with regard to your input tax credit. There has been recently change in the GST law as well as in the rule, wherein you cannot take credit unless and until such invoice has been reported in the GSTR1 or invoice furnishing facility by the quarterly filers and reflect in our GSTR2B. Credit only will be available post that, while obviously BBJ has been very much compliant on this and has been taking credit only when it is appearing in our GSTR2A. But going forward, instead of carrying out reconciliation with GSTR2A, we have to carry out reconciliation with GSTR2B. Now, what is the difference between GSTR2A and 2B? 2A is a dynamic form which can be used as a reference point, and it gets updated on daily basis, while GSTR2B is a static document which gets updated only on a particular date. So say for an example, for December month, the due date of filing return of GSTR1 is 11. For certain vendors, it might be 13. For IST returns, again.
Okay, you continue.
Yeah. So
it is 13th of Jan, which we can view
the 13th midnight. We'll be getting that 2B report. So basically, on 14th, we can carry out the reconciliation with GSTR 2B, and the purchase register which we have can be matched with that GSTR 2B, and we should ensure that the credit only to the extent of those invoices which are appearing in 2B are availed, and any excess credit availment beyond what is appearing in 2B would always be questioned by the department, and the same could be recovered along with interest and penalty. So we should ensure that we are taking utmost care of availing those credit as per 2B only. But yes, with this, we have to be dependent on the vendors.
Yeah.
And if the vendors are not filing within the due date, we miss on those credit and it will get deferred for the subsequent month till the time it is reported by vendor. So we should follow up with the vendors diligently, and we should identify those vendors who are not filing return timely, or who are the defaulters, and try to communicate to them and be compliant therein. And also, if possible, say if they are one-time vendors or there are any other vendors with whom we can have a business and we can discontinue with them, that should be our focus, because if unless and until they are compliant, we will not be able to carry out the businesses, and
We will have
credit
cash
will
loss.
not obviously
Cash loss.
that will add on to your procurement cost, and that is always not an intention to run the business. So we should be mindful in selecting our vendors, and also should be dealing with only those vendors, or basically try to at least educate the vendors so that they are compliant and they file the returns. Yeah. So this somewhere we have highlighted the key. Maybe next slide, Tushar. So what we have tried to highlight is
The quarterly return suppliers can
right.
file their.
So I'm just coming to that point, ma'am. So I'm just trying to highlight suggested action points which we need to take care. With regard to this change in the GST law coming in, one thing we have to ensure that obviously monthly filers, we have to follow up and get that return filed by every month within 11. And with regard to quarterly filers, so this is the vendor master we might have, we should identify which all vendors are quarterly return filers who are availing the quarterly facility. To them, there is a facility available, which is invoice furnishing facility. So while they have to file GSTR 1 on quarterly basis, but to just have the recipient, just to ensure that the recipient is able to take the credit in the same month, there is a facility provided to the quarterly filers, which is invoice furnishing facility, which is not mandatory for them. It is optional, but we should encourage them to use that facility, because if they don't use this facility and report the invoices raised on BBJ on monthly basis within due date, that is 13, then we lose all that credit in the same month, and that has to be availed only say in the 4th month once they file the return for a particular quarter.
And there will be
This
always
is a
a,
huge development we are talking about for the quarterly filers.
and there will be a difference with our financial input data and the GST portal data every
So
time.
there has to be a detailed reconciliation which has to be kept, and then we should ensure that we identify such quarterly filers.
Yeah. Shogato, please mute your mic.
Ma'am, please conclude.
Yeah. We'll cut it short immediately.
Yeah.
Okay.
Yeah.
We'll try to do that. Rakesh, please short of it. Nothing is
Yeah,
left.
so we
I
are
suppose.
just in the last portion only.
Yeah.
And
What the
this-
compliances BBJ is making regarding the GST rules and laws.
So with this, we tried to capture certain key requirements under GST and what is the compliance status done by BBJ. Some of the example is that we have been maintaining the unique series. So BBJ has been ensuring that it is
Yes.
maintaining the unique series for each financial year.
Yes.
Also, we have been capturing all the particulars which is required in the tax invoice, as well as we have been generating e-invoice which was made applicable from 1st January 2021.
Yeah.
With regard to way bill, we have been ensuring that we are generating way bill for each and every movement of the goods. We have also been mentioning the HSN at 6-digit level, which has been a new requirement with effect
Now
from
it has
1st April
become mandatory.
2021.
Yes.
Right. With regard to job work transaction, we have been filing returns. We have been ensuring all the compliances thereof, and also whenever we could not bring back the goods within 1 year, for one of the case which we discussed for Mizoram, we have been able to take extension and have been duly complying with the same. Apart from this, there have been certain other compliance requirement as well that we comply with the Rule 36(4), the input tax credit rules which we discussed. We have been complying, and like we pointed out, we have been carrying out reconciliations with 2A. Now we will be carrying out the reconciliation with the GSTR 2B. With regard to reversals required of your input tax credit, if you are not making the payment of the vendor's invoice within 180 days, there is a requirement. But yes, with regard to BBJ, this is somewhere the scenario doesn't exist because we have been taking the credit on payment basis.
Yes, initially we had some teething problems, so now it has improved a lot, and we have kept a bill register also for this, and compliances are made properly.
Right. So largely, we tried to capture all the compliance requirement. Hopefully, we have been able to manage and then at least cover all the key areas of compliances, and then hope that we are able to create the awareness of GST.
Yes, thank you, Rakesh. Thank you, Pia, and thank you, Tushar also. Tushar, is COVID positive, but still he has joined, and we are really grateful to BSR and company and KPMG both for helping us in complying with the GST law, which is very new to us. And from 2017, the whole journey of GST, as I was pretty bit involved in it. I should thank to all, even the higher management. I should thank CMD sir for helping me out and cooperating so much and keeping trust in me to comply with all the GST compliances laws and returns. And I should thank all my project co-workers and the colleagues and employees of all BBJ who has wonderfully achieved these compliances. And I very proudly say that I have achieved a certificate of appreciation from the Bihar state for GST compliances. I would request CMD sir to say something.
Okay. Okay.
Thank you, Mrs. Banerjee, and thank you the entire team, KPMG team, Sharji, Priya, and Rakeshji. It's a great learning for our young engineers who are doing job in sites. So it's a very good session, and I thank everybody for joining with us and made it successful. Thank you.
Thank you so much, sir.
Thank you for providing this opportunity.
I hope we can make a very good India with GST laws now. Thank you, Rakesh. Thank you, CMD sir. We close our session now.
Yeah, thank you.